Hello, everyone. So welcome to video 2 of chapter 9. In this video, we're going to be talking about moving expenses. I'll lay out some of the general rules. We will do the exercise from the textbook. The only thing is the exercise in the textbook, from my perspective, is a bit simple for all of the rules that we do go through. So I will also include sort of a more detailed version where I'll just highlight some of the ways that we will calculate certain expenses. Let's get started. So moving expenses are meant to be expenses you can deduct from income if they're required to pretty much acquire a job or to get closer to work. So individuals who relocate to enable them to be employed at a new work location, carry on business at a new work location, or commence full-time attendance at a post-secondary institution. In order to qualify for moving expenses, the distance between the old resident and the new work location is at least 40 kilometers further than your new residence. So if I was, let's say a city was 45 kilometers across, so I'm sitting here, I'm living here at one end of the city and I'm working on the other side. So it's a pretty far drive. So I say, you know what? Why don't I just move closer? I need to move at least 40 kilometers closer to my work. So I need to be within 5 kilometers of it in order to qualify for the moving expenses. If I only move, halfway towards the city, I'm still functionally close to my old neighborhood. It's not a big enough move that the CRA recognizes as being necessary to incur those moving expenses. You moved a little closer because you wanted to. It wasn't the primary purpose of being closer to work. So this really comes into play if you're ever moving, say, across country for a new job. But yes, there is this minimum distance you need to move. And it's always based on your new job, your new place of, your new residence to your new place of work. So even though I might have moved, so if my new house is, say, 45 kilometers and instead I go over it and I move to the next town and it's, say, 20 kilometers, I've moved 60 kilometers, but I'm not 40 kilometers closer, if that makes it help make it more clear. So you also can't claim moving expenses if your employer paid them for you. The employee receives moving allowances or is reimbursed unless amounts include employee's income. So if it cost me $5,000 to move and my work gave me $5,000 to cover the expenses, then I can't claim the deductions. I can't deduct it from my income because I'm personally not out any money. If they paid slightly more or less, so let's say they paid me 4,900 and I paid 5,100 to actually move, it's close enough that I would probably just say it's reimbursed. I paid a bit more, but we're not going to worry about it. Alternatively, I can take the 4,900, recognize it in my income. If I recognize it in my income, then I'll be allowed to deduct the full amount because I have expenses directly related to that cash amount I received. Moving expenses can only be claimed to the extent of income, my employment, my business, my scholarship. So since I've gone back a slide, since I've gone to a new work location, my moving expenses are limited to how much income I've made at the new location. So if I've made $100,000 for the year at this job, and then I move, it costs me $25,000, but I've only made 10,000 at the new job, I can only claim $10,000 of moving expenses this year. I can only claim the expenses for the income they're directly related to. Even though I have a bunch of income from a different job, I didn't move for that job. I moved for this one. So I'm limited to the income from that new position. Moving expenses claimed to extent of income, amounts not claimable in one year can be deducted in subsequent years. So even though I'm limited to that first $10,000 of the 25,000 I've spent, next year I will be making more income. So I will be allowed to save what moving expenses I didn't deduct, and I can apply them against the new income next year, assuming that it's from the same job and position. So I want to move. I think I need to get closer to work, but what can I deduct? So they have travel costs, taxpayer and family. So the travel costs usually provides, do we go into the rates here? Yeah, so we'll talk about travel costs. There's a simplified and a detailed method on the next slide. The cost of moving household effects. So if you hire movers or you hire a rental truck to bring your belongings, that cost, maybe you rented a storage facility during the moving process. That uh, cost incurred to move your belongings from one location to the other can be deducted. Meals and lodging at new or old residents. Now, the thing about this is, let's say I'm moving across the country. I've sold my house here. I've moved across the country, but when I get there, my new place isn't ready for me. Let's say I bought a house, but it doesn't close for a week. So for a week, I might have to put myself in a hotel and I have to feed myself during that time. I can deduct up to 15 days worth of expenses. So since I was in a hotel for 7 days, I can deduct those 7 days. If I was in a hotel for 21 days, I can only deduct 15 days worth of expenses. So I don't want to, so I can't just move across town and been like, well, I'll find a place eventually. I'll live in a hotel for 6 months. It's meant to be a very short-term stay. And you also have to select at the new location or the old. So if I stay in a hotel on this side and then I move and I'm in a hotel on the other side, I kind of have to pick which one works best for me because I can't claim them both. Um, Costs related to getting rid of your old place. So selling costs, if I had to sell a house and I'm paying commission, lease cancellation costs, I'm moving out of my apartment, so there's a penalty I have to pay. Because it's directly related to my moving, that can be deducted. And the cost to acquire a new residence, legal fees, land transfer tax. Up to $5,000 of interest, taxes, insurance, and utilities for old residents while vacant. I've moved, but I'm in the process of selling my house. Sometimes a house can sell quick, sometimes it lingers for a number of months. If it's lingering, I still have to pay those bills for a house I'm not living in. So you can deduct this, the utility expenses and the property taxes as long as they total less than $5,000. Once you hit $5,000, anything further you spend, you can't deduct and cost of revising legal documents. So these are legal documents related to the sale or purchase of your residence. So it's a pretty wide arrangement or wide variety of expenses, which is, I think in the exercise, it only kind of talks about travel cost and lease cancellation costs. But so I want to try do a more detailed question that goes through kind of everything and see what we can include. Just a couple more slides. When we talk about these travel costs, there's a detailed versus simplified method. Now, the detailed method is easy, but it takes a lot of paperwork. What the detailed method does is you save all your receipts. I'm traveling with my family, so if we stop at McDonald's for everyone to eat lunch, I just save that receipt, say, okay, I spent that much on that meal. And then we go out for dinner, I spent that much on that meal. So you get a certain number of meals per day for the distance you've traveled. The simplified method provides a flat rate. So let's say I don't want to go through the rigmarole, or maybe I lose my receipts. I have all these receipts for all these meals and, gas mileage and all this stuff, and I lose them or I missed a few receipts. The simplified method gives a flat amount. So when it comes to meals, each person in my family can have a meal of up to $23. Now, that's how much I can deduct from my expenses. It is, so that equates to $69 per person per day, assuming that that person eats 3 meals. So the simplified method is just giving this flat rate to say, okay, we assume a regular sit down lunch costs $23. If you have 5 people in your family, you'll multiply that by 5. Assuming you guys had 3 meals per day, you multiply that by another 3. So that would be $23 times 15, which is $345, I think, just off the top of my head. I could be slightly off, but about like so for a five-person family, it's reasonable that they might spend $300 in the day for various meals. So we had to pick up and travel. Now, it has to assume that it's just the cost to travel the distance. So if it's a small distance, they might just been like, well, it makes sense you stopped for lunch. If I moved from Ontario to Alberta, okay, it's reasonable that would have taken 4 or 5 days. But if I'm just moving across town, I just can't say, hey, here's 3 days worth of meals while we are kind of packing boxes. That's not quite what they're going for. They're looking for meals and lodging and gas that you paid for in transit. So we've covered the flat rate for meals. For mileage, if I'm getting gas on the trip, I can use the gas receipts for detailed. The simplified method differs for each province. So in 2023, the low was 0.525 cents per kilometer in Saskatchewan. Northwest Territories is a bit over 70 cents per kilometer. So for this course, when you're doing your exercises or the take-home assignment, assume a rate of 55 cents. This rate kind of gets updated every year. So to know the rate, you'll have to look it up. But for the time being, just assume 55 cents per kilometer. So if I traveled 100 kilometers, it will be assumed I spent $55 in gas. So I can choose whether to claim $55 for mileage, or I can look at a gas receipt I got on the day of travel. And let's say that receipt is $62. Well, I'm going to take the receipt. But you kind of have to make a full decision. I can't say, okay, for days 1 and 2, I'll take the simplified, day 3, the detailed. You have to select whole cloth. Am I doing the simplified method? Am I doing the detailed? In my work in public accounting, we almost always took the simplified method, $23 per meal per person, 3 times a day, and a rate of 55 cents is a pretty good rate that generally covers the actual amounts people paid. So although we would go through the receipts, we did find that the simplified method was either a good approximation or often slightly above what the detailed method gave us. So we would often opt to use the simplified method. So I mentioned about employer reimbursement. So CRA practice, if there's no reimbursement or allowances included in net income, but no moving expenses can be claimed. So if you are not given any reimbursement, your work doesn't pay you anything, there's no allowance to include an income. Sorry, the wording of that sentence, I was kind of taking me off. Anyway, if your work fully reimburses your expenses, there's nothing to include or deduct. They've met it, you're not out any money, so we just leave it. You won't include the income, but you don't get the moving expenses. If they pay for some of it, the CRA ignores requirement that moving expenses can only be claimed if employee includes reimbursement or allowance in income. So if there's partial reimbursement, the employee can claim eligible moving expenses. I'm sorry, my dog's chewing something at my feet. Um, the employee can claim eligible moving expenses that exceed employer assistance. So we have this list of a bunch of various things that can be included in our moving expenses. So if my new employer says, we'll give you $5,000 to help you with your moving expenses, if that $5,000 is more or less than my moving expenses, include it in income and deduct what I've paid. If it matches, just forget it. Leave it off the tax return because we don't want to spend the time adding a bunch of numbers in just to take it away. So the CRA practice is once you have an allowance, or if you have an allowance or no allowance, then you will deduct the full moving expenses against the income. So if you're getting a partial reimbursement, that money received, because remember, our moving expense claim is limited to our employment income at that job. So we can take that allowance, add it to the income, and now our moving expenses would apply against that full amount. I wonder if it'll be hopefully that's clear enough, but we'll try and make it clear with the exercise. So So, exercise 9-1, moving expenses. On December 20th, at the request of her employer, Miss Shevlak moves from Edmonton to Regina. She's always lived in a rented apartment and will continue to do so in Regina. The total cost of the actual move, including cost of moving her possessions, was $6,400. So we'll just call that cost of movers. In addition, she spent $1,300 on a visit to Regina in search of appropriate accommodations. Unfortunately, she was not successful in acquiring a home on this trip. She also paid $1,200 as a penalty for breaking her lease in Edmonton. All of the moving related expenses were paid in 2024. During the year, her salary totaled 64,000, of which 2,000 relates to the new work location. So she didn't change employers, but she did change work locations. She moved from Edmonton to Regina, which is more than a 40-kilometer trip. Um, Her employer is prepared to pay $6,000 towards the cost of her move. Determine if Miss Shevlak is eligible to claim moving expenses and why. How does the employer assistance impact her claim? So the employer assistance is trying to determine whether she's able to claim the amount. Now it says the moving expenses are $6,400. $6,000 is close, but because there's an excess amount, we will likely take the $6,000 and either include it in our income or apply it against that moving cost to figure out the excess. I'll try and show this on the spreadsheet. So to talk through the solution here, we're told there's three moving expenses: house hunting, paying for the movers, and a lease cancellation fee. So all in, Ms. Shevlak paid $8,900. We want to look at which expenses are allowed. Now, lease cancellation costs were on our list, so we will cancel the lease, $1,200, and we hired movers or a moving truck, and that was $6,400. The house hunting trip, especially since we didn't actually pick any place during that trip, is not allowable. We might have searched, we made a trip, we searched for some places to live, but we can't allow for taxpayers to just use house hunting as I guess, a front or a charade to just take a trip. So since the house hunting trip didn't result in the shopping or selection of a new place to live, it's not really included in our expenses. So movers and lease cancellation can be. So of the $8,900, 76 of them would be considered our moving expenses. So we are allowed to claim the 12 and the 64. So that makes 76. So those allowable expenses are above the employer allowance. So we can take that amount, we'll apply it against our total expenses to say, okay, well, now our net moving expense deduction, we have a total cash outlay of $1,600. So we can deduct $1,600. If it's if it's below the $2,000 for our new place. I mentioned that our salary is $65,000, but only $2,000 related to the new location. So we're actually limited to claiming that $2,000. If the employer did not provide an allowance, our $7,600 outlay would apply against the 2,000, and 5,600 we would be able to carry forward to next year. Another way you could easily deal with the allowance is, since it's less than our moving expenses, we could potentially just net it against that number and remove it from here. So now our net expense is still $1,600. We're looking at that excess amount. So since the $6,000 was offered to us to move our possessions, we can apply it against those moving costs. So that's another way we could do it. So basically, these are kind of three different calculations to just try and sort out the excess amount. So that's for exercise 1. It's fairly simple because we just have those two expenses. They're allowed. Is it more or less than our $2,000? This is a slightly more detailed version, and I want to run through it with you because I want you to see kind of everything on the list. So we still have our employer allowance of $6,000. Now, we're not given too many details about the number of kilometers. We are told 2 cities, but just for, I guess, simplicity's sake, let's assume the number of kilometers of the trip is 500. We're over those 40 kilometers. We are 500 kilometers closer to work. We are going to be traveling over 3 days, and the whole family is 5 people. Let's take a look at some more detailed expenses. So our detailed expense version looks at our actual payments. So when we were traveling, we had 200, or we actually paid $124 in gas. But if you look at the simplified method, we get 55 cents per kilometer. So 55 cents per 500 is $275. So we see, hey, our actual paid was less than the simplified. So let's opt for the simplified. Our travel for our vehicles was $275. Travel for meals, $69 per day per person. It took us 3 full days. So that means our simplified version is a little over $1,000. We take a look at our actual receipts. It says, well, we spent 859. Well, our simplified version is coming out to slightly more. So let's use the simplified. If we had fewer family members, maybe there's just 3 of us traveling, well, now our receipts are more. Let's take that number. So you can pick what works for you. So that's the simplified method for travel vehicles and meals. How much did we pay for hotels? There's not a standard rate for hotels stayed. So we paid $254. Let's say we rented a moving truck for $55. We're driving it ourselves, but we rented it for $55. But for using the moving truck, we also got a storage unit. So we moved out of our house. Our stuff sat in a storage unit for a couple days while we got the rental truck. So we spent another $620. So all of those are allowable expenses. We sold our house. So when we sold our house, we had legal fees of $1,200, plus we had to pay a real estate commission of $13,500. Both of those expenses are related to the sale of our house, which we had to sell to move closer to work. So we can deduct that total. And we have our temporary living. Our new place wasn't quite ready for us, so we had to stay somewhere. So we'll pick whether we stayed close to home or at the new home. So let's say we stayed close to the new home for 21 days. Our total expenses, let's say we paid $2,400. So for 21 days, we tally everything up for lodging and meals during that time. We paid $2,400. So we'll divide 2,400 divided by number of days, let's say 21. So that's $114.29. So 286, yeah, a little closer. So we paid on average about $114 per day. That gives us our daily rate, and we can multiply that by 15 to get our total. So you would only need to do this if your stay was over the 15 days. If we stayed 7 days and our total was, $700, just take that amount. But because we were over the 15, try and figure out your average daily rate and then use that to prorate to 15 days. Of the $2,400 we spent, we can deduct 1714. We maintained our old house for a few weeks. We paid $222 in various utilities and taxes. We didn't break a lease because we weren't in an apartment, but we did have to spend $85 to revise some legal documents, most likely related to the sale. Maybe some legal documents related to easements in order to include in the sale papers. So we have a much wider variety of expenses in this example. So our net moving expense deduction was $12,960. So that's all of our expenses minus that $6,000 allowance. So our excess cash outlay was $12,960. That's how much we were out. At the new job, we've only made $2,000. So $10,960, that much money will be available to us to deduct next year when we've had a chance to earn more income at the new job location. Hopefully you guys found this version of the question helpful. As I said, the exercise is pretty comparatively simplistic. It just doesn't give you a chance to see all of those various expenses we mentioned before. So I just wanted to give a detailed example that sort of went through all the things that were listed here. If you have any questions, always feel free to message me. Um, in the next video, we will discuss childcare costs and how we can deduct those from income. So thank you for your time. I'll see you in the next video.